Okay, hello everyone. So, can you guys hear me? One second, I'm just having.
Yes,
Oh,
Yes.
we can hear you.
Yes.
oh, excellent. Hey Fred, good to see
Hi.
you guys. Excellent. Oh, we have Jeffrey here. Good to see you, Jeffrey. Very nice. Okay, so we have about 9, 10 people uh joining us now. So we can go ahead and start. So, interesting times, huh? We've had a crazy run up since the October lows. It's been quite the move for many tech stocks. A lot of our favorite names like Tesla, AMD, Nvidia to a point. I mean, they've just been going wild, higher and higher it seems. And you got to ask yourself, I mean, how long is this going to last without a without a considerable correction, you know? I We've seen some remarkable upside, and we're seeing actually some corrections already beginning here. I'm looking at the Palantir chart, so we're below $15 now. I mean, that's still a long way from where we were at the beginning of the quarter, and of course around the lows where the stock was at $6. But I think this correction should lead to another buying opportunity, and that's gonna be good. I'm also considering buying back the covered calls that I have on part of my Palantir position. They've come down from about I think $1.40 to around 80 cents now. So we'll see that they'll probably come down some more in the coming sessions if we get a bit more downside in Palantir and other stocks. And I think we're probably due here uh, for for a pullback in some of these tech stocks. I mean, Tesla has just gone wild, huh? 280 it hit. Wow. So I mean, we could use a nice pullback here to at least 250, 240 level, possibly lower. I mean, if we get a strong enough correction, we could see Tesla possibly around 230, 220 range, but but we'll need a good market correction for that to materialize. Anyways, yeah, exciting times we're living in. So, let
Victor, just a quick question since you mentioned Tesla.
yes, I
So
was going to get to the question.
what's about Tesla that, make this move? That was like pretty significant move. Hey, what's the good
Mag
news?
magnificent move is correct. Well, so for one, we saw Tesla uh, just get demolished. I mean, the stock price just got so heavily oversold in the later stage of the bear market. We saw most uh, oh, we have more people joining us. Excellent. So uh, we Tesla was actually one of the last companies to bottom, I guess you could say, and it got a lot of sell pressure towards the end, and when we got the stock down to actually $100 a share, I believe we're very close to that. And then that's, I mean, I put an article out at that time saying, and before that time saying that was going to be the buying range, 100 to 120. And when we did get into it, and excellent buying opportunity, no doubt. What's behind the move? Well, first the stock got massively oversold. Uh, Second, it was just undervalued relative to all of its long term potential, and the advanced technology that the company has. I mean, if you want to talk about leaders in AI, of course, we speak of Nvidia, that's ahead of its competition, but we must also speak about Tesla, that's clearly ahead of its competition, and is one of the leading companies in AI. Any way you look at it, it's uh, it's definitely a leader, and it's not just about the AI. Just look at what what Tesla has done recently. I mean, it's basically cementing its place as the, the preeminent EV automaker in the world, because all the other guys that want to compete, the pure EV players like Lucid and Rivian, I mean, these guys haven't even established mass production yet. And with this kind of slowdown in the economy, and Tesla's massive earnings and its ability to actually lower prices, so even as the company's lowering prices, it's still making a ton of money. I mean, this is a massive advantage over its competitors. So that's why you're seeing its stock, just keep going higher and higher. And, you're seeing Lucid, Rivian, even NIO, some of its like closest competitors, kind of, struggling a bit because it's difficult to compete with Tesla. It's a hell of a company. Obviously, it deserves a premium, and I think rightfully so. It's overbought now, but I still think it's going to go a lot higher in the long run.
Right.
Cool. Did I answer your question?
Yeah, yeah.
Okay, good. All right, let's get to some more questions. Just we can just it's kind of a free discussion, so whoever has a question can just go ahead and you know go ahead and ask, and we'll take it from there.
Hi, Victor. I'm Thomas. I read you wrote somewhere, I don't know where it is exactly, in one of the chats. You wrote that you were thinking about some more extreme hedging strategies. What are they?
Yes. Um, I believe I used more, yeah, more aggressive hedging strategy.
More aggressive. Yeah, yeah.
But yeah, it's close. So basically, we're using there are so many different hedges, and then I mean, basically by hedges, we're discussing shorting stocks in a way, or major averages. So the first the first play that comes to mind is the collar play option, because it's the simplest hedge to administer on top of a covered call. So once we have a covered call in place, we can go ahead and layer a put on top of it. We use the premium from the covered call option to buy the put. So we're essentially not risking any of our own capital for
But
this
but
for this hedge.
sorry to interrupt you, but to do that,
Yes.
you need a certain number of shares, right?
Yes, you
You
need to
you
have
need
a
you need quite a lot of shares because my typically my positions are very small. They're like $5,000. So can I do a CCD on that?
CCDs are only done in blocks of 100 shares,
Yeah.
unfortunately.
Yes. Okay.
I mean, some other options, I'm just going to throw them out there. Some of them may be risky, but on the other hand, when the market is experiencing a period of decline, they should do well. So, I mean, could implement, forget about the CCD for a minute and just take that put option, and maybe just go ahead and do like maybe a percent or two of a position you own in the, just, or maybe up to 5% of the value. Like, say you have like whatever, like $10,000 in a position. You can maybe uh do like a 1 to 5% put option on that, of that value. So that's a hedge that we can go ahead and use. I mean, there are many inverse ETFs we can use, like for major averages, if we want to short the Nasdaq 100. I'm not saying to do this. This may not be the best idea, because of course we've seen the market going higher and higher, but some of these more aggressive hedging strategies, they do include inverse ETFs. And if you have access to the futures market, we can short futures contracts also. This is a very effective way to hedge or short the market in very specific instances. I would not I'm not, I wouldn't say to do this often, but in some specific situations for a short period of time, these do make sense at times. So these are the primary ones that I'm looking at right now. If we're not doing CCDs and collar plays, then we can examine just some a small amount of put options or some inverse ETFs, and then if we want to use the futures contracts, we can implement those as well. So I mean, basically, these are the hedges that I use. I mean, there's also the VIX, but I wouldn't really recommend that too much, especially the ETFs, because they degrade very, very quickly and they make for poor and I'm not even investment, but poor trading vehicles overall. So I wouldn't be, I'm not too keen on that. VIX futures is better. VIX future contracts are better, but still there's some I've experienced in my experience, I've seen some problems with that as well. So it's it's something that's out there, that's a tool that we can use, but we need to be very careful with these.
Okay, thank you.
You're welcome. Okay, so who's next?
This is how I go. I'm happy to go.
Okay, cool.
Can you hear me? I'm the tutor, the annoying one.
The tutor, yes, the only one. Nice to meet you.
Um,
Excellent.
I basically just want to say, I don't know if people are looking at the stock market at the moment, but sort of well, anyone who was calling you an idiot for talking about a pullback is themselves an idiot.
Yeah.
And I was just wondering what with Palantir in mind in particular, and Tesla, because I'm sort of um like and Nvidia, to be honest, really keen to get in on all three
Yes,
of those. I was in on Palantir, and then was nice and sensible, and took my profits, but too early. Um,
that happens all the time,
uh,
fortunately.
like what sort of levels are you thinking? Like Palantir's already dropped. That was up near 17 at one point, right? And it's below 15 right now. It's
Yes,
really not a good
correct,
day today.
correct. That's a great question. So that's going to depend on whether the major averages can hold the initial critical support levels. So looking at at the S&P futures, right? So I see them, they're trading close to the critical level now. So we definitely don't want to see a breakdown below 4,400, 4,375, like 4,400, 480, 4,375 is the range that if we get a breakdown below that, if this support range gets penetrated, we will likely see a drop to 4,300, and then it's also possible to see, like a full-blown correction materialize with a 42 to like a 4K bottom possibly. So I mean, that's still like a long ways away. So I don't want to be I don't want to imply that the market is heading there like 100% of the time. I mean, of course not. There is a possibility that that we do hit that 42 uh 4,000 range, but in order for this to even become a possibility, we first need to break below 4,400, 4,375. So uh, our buy-in levels in Palantir, Tesla, Nvidia, and most other stocks, they're going to depend on how they're. It's going to depend on how deep this correction is going to be ultimately. But just to give you some rough numbers, I can do that. So Palantir, so we're at about $15 now. we've come off a little bit off the top, so not too much, but I can tell you that probably around, if this pullback continues at around $14 to $12, it becomes quite I mean, it becomes more attractive, of course. So, I mean, the stock should draw in some buy interest there. And if we get a deep enough correction, we could potentially see Palantir fall back, to maybe even the 10.50 to the $12 range. But that's if the correction gets really deep. I'm not sure if you want to count on that, but possibly. I would look to open some positions before then, just an initial position. I would probably, consider in the $14-13 range, and then I would dollar cost average, maybe in the $13-12 range, and if given the opportunity, then lower as well. So we would probably want to buy in, open our position in tranches here. So if we look at Tesla, for instance, so we looked at Palantir, looking at Tesla, it's massively overbought, obviously in the near term, but it's one of those stocks, it can get more and more overbought. Of course, it's a lot like, probably Nvidia's is the closest thing I can say. I can say Tesla is closest to, and we can also see the 50 days about to go across the 200-day moving average, which is it's going to be a bullish development. So I'm not sure the correction in Tesla is going to be too deep. I will consider rebuying or adding to my position, because my position it's shrunk because of the covered calls. I would consider probably around 245, 230, an initial entry into Tesla. Maybe even 250 if we see that the correction isn't going to be as deep as we expected. But if there is a deep correction, we could pick up shares in the 220 to the 200 range in Tesla. So I mean, that's probably your buying range there, about roughly 240 to 200, I guess. And
if you don't see it sort of materialize, because I know you really like Tesla, and you obviously really like Palantir and stuff like that, and as you say, you trimmed your position. Are you okay with just sort of missing out in a way, if
really.
It doesn't quite hit the
Not really.
not okay, but like what's the scenario? Because of course there's waiting and you you can outwait, the stock market can always outweigh you.
Yeah, exactly. I can't say that I'm okay with it. I mean, on the one hand, of course, I'm okay with it because I don't have another another option than to be okay with it. But of course, I mean, you can look at the I'm sure a lot of you look at the all-weather portfolio spreadsheet, and you see that I had some calls exercised at 170, the Tesla calls. So of course, I didn't that position didn't make nearly as much money as it could have. But I mean, you guys have to understand that I've been implementing this strategy for like 15 years or something. So it's just become so routine for me and such a habit to put like partial positions under CCD strategy, or whatever whole positions sometimes even, but I like the partial approach better in most cases, especially if we're talking about high potential companies like Palantir and Tesla and Nvidia and so on, because if all your shares get taken off at a cheap price, I mean that's going to be that's going to be a disappointment. So I tend not to get too rattled by these things, but yeah, some of these moves that they've been extraordinary. So it is what it is, and I mean some of these stocks, of course, so we could have made more profits in. But I think if you factor in like the overall strategy long term, it's very beneficial, especially in times of heightened uncertainty and sideways or downward markets. So it does, it does its job. I'm sorry, Tudor. Did I answer your question, or was there another part?
Yeah, no, you did. If I could just have one small follow up, and then I'll
Yeah,
shut
of
up
course, of course.
finally. I think the thing I struggle with most is just the FOMO, and that's just made me lose so much money in the past. And it's just it's the dumb investor handbook, basically.
Yeah, I mean that's
And
yeah. Go ahead.
how do you like? I don't know. I guess take a more. Do you have a more sort of algorithmic approach where you're just like, no, these are the levels, or is it just like, no, fuck? Sorry to anyone ever offended there.
It's okay. So yeah, the FOMO, yeah, it's an interesting phenomenon, and I mean, I've of course I've experienced it, and I'm sure most of us have gone through the FOMO effect. It in my experience, it usually does not work. So, I mean, if you're chasing a stock, and it's very overbought, especially if it's a company that you don't really understand. Here's an important element. I don't like investing in things or companies that I don't understand. That for me is it just doesn't seem right in a way. And most of the FOMO I think occurs with people not really understanding what they're buying, but they're just chasing a stock. Like, they like the idea of a company, of a stock. They see, that it keeps going up, and and obviously they want to get in on the action. But I'm not a big fan of the FOMO. I try to stay away from it as much as possible. That's why I consider myself more of a contrarian investor in most situations. I try to get in on these stocks at the lowest like possible level, and then if I see that there's like more upside potential, I'll add to my position. But I'm not looking to buy like Nvidia at 400. I would really like to buy it at 300 though. I mean, I'll be honest with you guys. If this stock falls back to like the 300, 320 range, and it could, you know, I would buy Nvidia in that range. Yeah, because I mean their last earnings report was just it was remarkable. It was like nothing I've ever seen in 20 years. So it was I mean it's saying a lot for the company that it's got a hell of a future ahead. Cool. So who's next? I can see Fred
Victor,
has a question.
Victor, can I ask you a question?
Of course, Fred,
I'd
it's
like
great to see
to
you.
get your perspective on the digital currencies right now in light of both the SEC's actions, which have been somewhat punitive to some of the players. At the same time, BlackRock has just acquired a company to process digital currencies there. And so I just noticed, of course, some action just recently, some upward movement. But what's your feeling about the current situation and where you see it going in the near future?
That's a very good question. So so uh unfortunately, I got into the cryptocurrency party a little late. I got involved in around 2017. and that was right before the, like the bubble popped, so it wasn't like the best time. But I did get involved more seriously and with much better results on the next wave up, where I just started buying like around the bottom when Bitcoin was like around six to 4,000 or whatever, 7 to 4,000. So yeah, I made definitely great time to buy there. Bitcoin and other altcoins, I mean, they were down by like a lot of them were down like 99% from their tops. So and we're seeing the same parallels now from the bear from the recent bull market peak to the recent lows. If you look at some of these altcoins, like I know they get a lot of bad rep, like altcoins. A lot of some people say altcoins are worthless. Or even Bitcoin is worth, but I mean they're not. They obviously have, many of them have uh, you know different uh, functional usages and transactional potential, and there's uh, definitely a lot of industries are going to be incorporating digital currencies, and I mean they already are. So I mean the trend is clear that this is an important asset class. It's not just like a worthless bubble. It's not, this isn't tulips. Um, a lot of some of these we also have to differentiate. Like the I call them the proper cryptocurrencies, or like Bitcoin and Ethereum, and um, Monero and whatever. There's a lot of them that are, they're like in the top 50, and we know that there's a lot of functional uses for them, and we can kind of tell that they're going to be around in the future, and probably the demand for them could rise. I also like to buy the digital assets that have the limited supply, that they can't just be minted like forever. You know what I mean? Because obviously there's a huge advantage there. Um, I see it as an opportunity long term, Fred. I'll be honest with you, I especially like Ethereum, and of course Bitcoin as well. And we saw a huge move in Bitcoin today, and in recent days, not just today. We've seen a big rebound, and the whole sector is starting to move. And again, if we incorporate this the factor about many altcoins being down by like 90, 95, some 99% from their highs, we're probably in the early stages of another kind of, I guess, bull market. So um, I raised my position in the all weather portfolio to about 10% in digital assets recently, and these are the coins that I believe in, and I think there's a lot of upside ahead. I definitely believe in the space long term, because it makes sense.
I guess one of the attractions is the similarity to precious metals, in the sense that these coins that have limited quantities uh, should, theoretically anyways, hold their value.
Yeah, yeah, I can see that. But I look at it a little bit differently. I look at it more like there's a future where these are essentially like networks, these different cryptocurrencies, um, and they're like applications also. So I just think that the functional coins, they're going to be like, some of the more well-known ones, like Chainlink and Polkadot. and others, they're going to be they're going to have more functional uses in the future. Therefore, demand is going to rise. So and supply is limited. So that's a huge positive. And then there's the transactional coins that I'm also keen on. And these can be like Bitcoin Cash or Zcash or whatever, Dash. I mean, these are like the old school coins. But they let's not forget that they are excellent transactional vehicles. I mean, people can transact all over the world in them, and there's also limited supply, and they're safe, secure, and fast and effective and cheap. So there's a future for these as well, in my view, and a lot of them are very, very, very cheap right now. So it's what happens in the cryptocurrency market, because I've seen several of these up and down waves now. In the bear markets, people just lose interest almost completely and just dump, basically sell these to sell a lot of these coins, close to 99, 95, 99% off the tops. And then when the cycle gets started again, they start buying and then buying, and then when the FOMO kicks in, we can see these things probably at new all-time highs in the next several years. So obviously it's an elevated risk sector, but it comes with a great amount of long-term potential and price appreciation potential as well.
Okay, thanks.
Cool.
Victor,
Vic, go.
this is Ben. Just a follow-up question on that one. Do you see any correlation between how the stock market goes up and down versus the crypto market? Is when the stock market goes down, does the crypto market have an impact? If so, how does that, in your experience, how does that work?
Yes, that's another good question. So typically we see a close correlation, a relatively close correlation between the cryptocurrency market and higher risk asset markets, like I guess the Nasdaq you can compare it to. So the reason behind this is that I guess Bitcoin and the cryptocurrency market, these are the ultimate risk assets, right? I mean, there are enormous exchanges where these can be traded, and they really are the ultimate risk assets, because they're much more volatile than stocks. But we also see just mind-boggling appreciation in many of these coins. Basically, you just have to catch the wave. Now, how is it correlated with stocks? When there's a lot of easy money in the system, and the stock market is doing well. Of course, there's a lot of capital around, and people want to play around. They want to make money, so they a lot of this capital flows into the cryptocurrency market as well. On the other hand, when we have a tight market like we had recently, or like we have now, basically, we have a tighter monetary environment. Let's just face it. So obviously we saw quite a deep correction in stocks. But if you put the stock market chart up against the chart of Bitcoin, you'll see that that the peak was around when the Bitcoin's peak was around when the market peaked. I think it was probably closer to when the Nasdaq peaked, and then the bottom also occurred. Bitcoin hit around, I think it bottomed at around 14,000. Also around the time when stocks hit a bottom in October, I believe. So I mean, we see a very close correlation between between stocks and cryptocurrencies. Now, on a short-term basis, it can be it can deviate like we've seen now. One reason for this could be because stocks have been getting a lot of bids lately, and they're overbought. I mean, people are noticing this, while the digital asset market, has been a lot more reserved lately. But we're seeing kind of a rotation out of, I guess, out of stock related risk assets and into some cryptocurrencies now. So I think that's what we're seeing here.
Thank you. Just one more question.
Yes, of course.
With respect to what's going on with Ukraine, when the war first started, there was a lot of talk about grain supply, fertilizer stocks, that there's going to be a lot of action in Mosaic, NTR, and things like that. What is the situation now? And do you think those industries are still going to be in demand, or do you think the world has learned how to adapt, and we have moved on, one way, shape, or the other?
Okay. So in respects to Ukraine and the grain shipments there, so yes, I had the same thesis that that with the shortage of grain, of course, Mosaic and Intrepid Potash and other agriculture companies would do very well because there would be more, demand would outstrip supply by a lot, et cetera, et cetera. But I mean, as we see, Russia is allowing grain shipments to flow from Ukraine. So this of course is benefiting the global grain supply. And perhaps the market is in a way is disappointed that this is occurring. And these stocks are, we were expecting that these stocks would go up because of this, and now something unexpected is happening, like Russia is being reasonable in this scenario, in this instance. And these stocks are getting hammered basically. But I still think that they're good long-term investments, for several reasons. Another reason why these stocks are struggling is because inflation is declining, and more than expected. So, in by most standards. Nevertheless, longer term, we're still going to have inflation issues, I believe, even as the Fed kind of has a handle on the situation now. I don't think that they're gonna be able to keep inflation, low or at around their target rate of 2% for long. It's just not something that is probably going to happen. Several reasons for that. Because the market is so addicted to easy money. It's like it's the new norm now. So I don't think the economy is going to be able to function properly with rates where they are now, around 5%. So we're probably going to see, I'm pretty confident we're going to see a pivot, or more like a lean more leaning towards a pivot, soon. We're probably going to see the Fed moving closer and closer there, and then eventually we're going to see, and this is probably going to happen relatively soon, probably, or it's tough to put a timeline on this, but maybe early next year, or mid next year, we could probably see some easing by then, maybe. So obviously that's going to be good for material stocks, agriculture stocks, gold stocks, metal stocks, industrial stocks, and et cetera, and tech stocks, and pretty much risk assets in general. So I think the Fed's going to come back to that, to the easing policy. Cool. Oh, and of course, it's what happens in Ukraine. It's an unknown factor. So I mean, the grain shipments they're flowing now, but you know we could have there's really only one functioning port in Ukraine. That's the city where I lived in Odessa. So if that place, I mean, if that port stops functioning, I mean, forget about those grain shipments leaving. Of course, I hope that doesn't happen, but it's a possibility. Anything can happen with the war. It's an unexpected. It's an it's an unpredictable situation, and um, anything is possible. And I like my agricultural stocks, and I'm keeping them, and I think they're actually good long-term buys at these levels, especially Mosaic. Yes, sorry for the long answer. Okay. Any
Thank you, thank you for that. I appreciate it.
You're welcome. Okay. So let's get to maybe some other questions here.
Victor, this is Jeffrey on crypto. Do you hold any of it in brokerages, or do you have it all as cold storage offline?
Hi, Jeffrey, and it's great to hear from you, and great to see you make this meeting here. Excellent. Yeah, I don't like to keep to keep. I'm pretty adamant about security with digital assets. So yeah, I keep them I keep them in a cold wallet. I don't like to keep them on exchanges. If I need if I want to sell something or trade something, I'd rather transfer the asset onto an exchange and then get rid of it or whatever. Um, Trade it for something, but I don't like to keep digital assets on exchanges. I don't think it's I've heard too many sad stories about different things happening, and I've seen even the best exchange in the world, Binance, the biggest, stop functioning properly on several instances. When the crazy volatility sell-offs occur. I mean, I've just seen it just stop functioning. It's crazy what happens, but it's something that we have to deal with with the industry, unfortunately. But better safe than sorry, in my view. And the cold storage wallets, they're not expensive, so I think it's a good investment to keep most of your digital assets stored safely. I think it's worth it.
And which one do you use?
I have the Trezor.
Trezor, okay.
Yeah, but there are
Yeah,
others.
I had some cash sitting USD in Binance US when the hubbub with the SEC just happened, and it did slow a transfer out for a couple of days, and so I wound up at the same point going, okay, I'm done with having any resource in, because it was Binance US. I got my money a couple of days late, but
Yeah.
I'm also going to just share something, which is I recently watched a 2.5 hour podcast with a guy named Lex Friedman. I've watched several of his, and the 2.5 hours was with Elon Musk. And I have to admit, part of my interest in long-term hold in Tesla is that Lex touched on robotics with him, and the advances that basically talking about the Tesla as being a four-wheeled robot. So how hard would it be for them to come into the general robotics market? And you could sort of hear the groundwork being laid for that. So someone like Musk knows that railroads failed to recognize they were in the transportation business, and for us to think of Tesla as just cars when they're very advanced at robotics would be a mistake to miss. So I feel like long term, there's a whole other chapter that's liable to start soon, because AI, I think, is going to drive it. So to me, Tesla is an interest even beyond cars.
Excellent point, Jeffrey. I could not agree more. Tesla has been and remains my favorite company in the world. That's not a secret. It's an amazing company. I think obviously Elon Musk is I guess he's a genius. So I have no doubts that he can excel and propel Tesla, in robotics and AI, of course. And I mean, he has an AI company also, I believe, OpenAI, if
Yeah,
I'm not mistaken. So, um,
I
obviously,
think he's related to that one, but
yeah,
I don't think it's his. But then, of
yeah,
course,
yeah,
he's
yeah.
got the neural
He's got
link thing.
some influence. He has a lot of influence in the Neuralink. Yeah, he's got a lot of
Yeah,
influence
that's his.
in the AI industry. So, of course, uh, of course, Tesla is going to be very heavily involved with AI and robotics in the future. And there's enormous potential in that, in the robo taxi business. I know it may sound silly, but it's probably where we're heading in the future. So,
Oh yeah,
yeah, and of course the personalized robots and who knows what else is going to be out there. But definitely Tesla is on the front lines of this industry, of these industries, I guess you could say. And
yeah.
this this phenomenon, I mean, this dynamic implies that Tesla could have a market capitalization of several trillion dollars down the line. So I mean, it could be one of the world's, most. I mean, it already basically was one of the most highly valued companies, and it really should be in the future. So I believe there's a great deal of upside long term in Tesla for sure, even at these
One
levels.
more question. One more question. Pivoting back to crypto, which is that others like me may be in the same situation I'm in, where I have a lot more resource in IRAs and SEPs than I do after tax in brokerage. So, are there any ETFs that you like or trust that follow crypto, that are holding crypto assets, that allow you to do IRA or SEP? A portion of your IRA or SEP as crypto.
Yeah, I think I'm not 100% sure on this, but I think the only one might be uh or the best one might be, I'm not sure if it's only one, Bito or Bito, whatever, BITO, I believe it is. Um,
Okay.
this this is probably the best ETF in my view, because the other ones aren't really like the GBTC. It's not traded on a major exchange, so I don't think that's going to be eligible for like an IRA.
Mhm.
Yeah, but BITO, it's the ProShares Bitcoin strategy ETF. It trades on the Amex, and it tracks Bitcoin pretty properly, and it has the physical assets. I like this one. This is the one, this is the one that I would go with.
Thank you.
Yep. I'll drop this down. I'll drop the chart of this into our group now. Okay. So while I'm doing that, who else has a question?
So like I mean I agree 100% about the positive future about Tesla, but I also read that China has already become the largest EV car producers. So I know that US is always going to be protecting like its own, like since what they did with the Chinese media competition. um, but I think so what do you think about the Chinese EV, producers? I know you own like several companies as well, and you're obviously pretty bullish on some of those. I think especially like BYD seems to be like a very well managed company
Yeah.
as well. I think that was one of the Charlie's positions. It did very well. So I mean, I think the China has been dominating the other like solar panel, producing. They're trying to move into the EV car producing. I think that's the next natural step for them, right? And eventually they want to move to the chip business. Obviously, that's going to be extremely difficult for them right now. But I think for them, the hurdle to move into EV car business is not. Maybe part of it, you can say maybe Elon just disclosed all their patent, right? Patent rights a few years back. I don't know if it's backfiring to some extent, but also, I mean, maybe he was just trying to build the whole EV has a good future on the EV business. I mean, it's kind of very interesting. Maybe try to get your thoughts on this a
Yeah.
little bit.
So
Yeah.
first of all, about China, yes, it's an amazing EV market. It's the best. I mean, there's the most amount of drivers by far. I mean, the amount of drivers in China, it's like twice the size of the whole population of the US, if not probably more. So I mean, just the sheer number of drivers and the potential for the amount of vehicles sold and their demand for EVs. I mean, it's remarkable, and their growth in the EV market and China's projections to have 100% EVs on the roads by, like, I forget what it is, but they do have like a plan on how to get there in the not so distant future. So it's really, I mean, China is making a huge push towards EVs for obviously for great reasons, because of the pollution and other factors, and of course it's much better, much greener, and all that. So I can tell you, continue to like the pure EV plays. BYD, it is an interesting company, and it's done very well, and it's done very well in its EV segment as well. But unfortunately, I don't own this one, and I never did. And I guess did I miss the boat on it? I guess so, but I own Tesla throughout the whole time, so it's it's all right. It's not really a problem. Um, I do think it's a good company it's still a good company with a lot of potential ahead. But I think some of the pure EVs like Neo and Xpeng, uh, these these companies are more. I mean, they're very different because Neo makes like a premium vehicle. Xpeng makes a more affordable vehicle, or vehicles, I should say. Um, but I like these, and China likes these companies. The Chinese government likes these companies. The Chinese government supports these companies. The Chinese government already saved Neo from going bankrupt. So I mean, the Chinese government is not. I don't believe they're going to allow a company like Neo to go bankrupt. I mean, that's, of course, that's my subjective view of the situation. But I I do like these Chinese automakers long term. I know they're going through a difficult time now for several reasons. The slowdown in China, the COVID situation there, the strict COVID policies in China, the so there are some obvious issues there. Um, but Tesla is not the only company that's going to succeed in this market. There are going to be other companies that are going to do well. There are going to be other companies that should be serious competitors for Tesla. And some of these companies could come from China, like I've said before in some of my articles. I think Neo is the closest Tesla competitor that there is, because their strategy resembles Tesla. Their cars, it's like, it's premium segment cars, so that resembles Tesla. It's 100 pure EV, that resembles Tesla. So there's a lot of similarities there between Neo and Tesla. And I think despite its difficulties, Neo should pull through and has a bright future ahead.
Okay, thanks.
Yeah, no problem. I think we may have time for another question or two. Anyone have anything else they want to ask?
Hi, Victor. I just want to add up to this topic very quickly.
Okay.
So I have a report on the meeting I think that's happened today in China about from the Administration of Industrial and Info Tech Department. So the report is basically saying that they will be pushing level 3 or higher commercialized auto drive vehicles on the road. I think they're having level 3 like auto vehicle commercializing right now. I have seen some videos about that, and I think they are more focused on the intelligent connected vehicle, more on the cloud base. I think that's where what they're trying to push. And lastly, they're trying to push the chips, pushing the lithium mineral stuff.
Yep.
Yeah, I think that's what the government wants to do, and they also extended the debate on the energy vehicles.
Cool.
So yeah, that they just come out today, this morning.
Oh,
So I would like to
that's
share.
thank you for sharing. That's very interesting information. I haven't seen that yet, but I haven't seen that report, but that sounds good and bullish for the industry, of course. And of course, we like some lithium companies. We like some lithium stocks. We have them in our portfolio, and um, and of course, this there's obviously great opportunities in EVs and the lithium segment that supplies the battery power, the battery capacity to run these vehicles. Of course, we're going to see more and more of them in the future. So it all makes sense.
Yeah, personally speaking, I will say that they still take some time, relatively longer than we think, for them to grow because China is not doing very well at the moment, as we all can tell. And yeah, it's gonna take some time, but bullish long term maybe 1 or 2 years later because it's all cloud-based and the computational power stuff. Yeah, it's gonna
Absolutely
take some
great.
time. Yeah.
And if we want to look at some companies, you know, that may benefit from there, I would look straight at Baidu because they have, they have the cloud, they have the AI, they have the driverless technology. So I mean, that's a company, that's one of my favorite companies actually. I think it's very undervalued. And if I mean, if we're talking about high quality Chinese companies with exceptional potential, I think Baidu is my number one pick, to be honest.
Yeah. One last thing to add. As we discussed about Tesla, OpenAI was owned or partially owned by Elon Musk, but he exit. So I think Microsoft owns partially of the OpenAI, just to correct things.
Yes.
So I think Elon tries to have his own AI company, but I don't think it's on IPO or anything. It's more like going on Twitch, I think. Twitter. Or is it Twitch or Twitter? Twitter, yes.
Yes.
Yeah.
Okay. Okay. So yeah, but there's like Tesla has like its own AI segment, so
Yeah.
he's they'll be doing good with that. But yeah,
Yeah, Tesla is absolutely great. I'm an engineering student. I see their product is like amazing. So I do believe they have potential because I'm more of a physical asset stock person. Because they have real product. We can see, we can
yeah,
tell it's functioning. So yeah, I'm more of a believer on that. Yeah.
cool. Excellent. Okay, guys,
Thank you.
thank you very much. Unfortunately, it's 6 o'clock already, and time or 6 o'clock where I am. If for anyone doesn't know, I live in Greece now. I live a little south of a bit south of Athens, not to be in the city, but by the sea. It's very nice and peaceful here. So yeah, it's 6 p.m. here, and I know it's 11 o'clock in New York. So I don't know where the rest of you are, but I know I have we have members from all around the world pretty much. So no matter where you are, I wish you an excellent day and all the best, and thank you everyone for joining our Zoom session and sharing and asking questions. And I think it was another excellent discussion, and I had a great time. It's just too bad that it flew by so quickly, and I think that we should probably do these more often, like every 2 weeks. I think we should probably do a Zoom session just to see where everyone is, where markets are at, and what we can do to basically achieve the best results possible in our investments. Cool.
Thank you.
Thank you, Victor.
Hey, thank you guys.
Bye-bye.
Have a good day. Bye.
Thank you. Bye.
Yep. See y'all
Bye.
later. Bye.
Nice to meet everyone.
Nice to meet you all.